Let's bring in Alan Nuckman. He's got a trade for us and some thoughts on the market as always. He's a chief market strategist at St. Paul Research. Okay, Alan, first let's talk markets. Are you impressed by this response to the stimmy? $2 trillion? What is this? We're talking basis point moves, Alan?
Well, I'm impressed by the market action last week. What we saw the Dow and the S&P go from sharply negative to close positive on a weekly basis. That's impressive. Now, tech has tumbled and hasn't come back yet, but the action from Friday was very positive. The fact that it was much lower and came back and closed positive on the session, it's got to build on it. That's true. But that's a very healthy sign. We're finally seeing some capitulation in tech after this tumble. But there's been many, many times we've been down 10% over the last 5 years. And guess what? Each and every time they've rallied back and made new all-time highs.
Okay. So until proven otherwise, go with the trend.
Right. You want to be buying dips still. It hasn't changed into a sell rally market. It's definitely still buy the dips. Now, let's get to rates because I know we want to talk about that. And I did look at the markets. The markets are usually right. If you look at the Eurodollar futures, if you look the 2023, 2024, and 2025, pricing in a half point rise each of those years, that would bring it to 2% in the short term. Okay, so the markets are not pricing in any short-term hike in rates, even though we're feeling like it could happen sooner as opposed to later. So, usually the markets are right. Let's see if this is just a rate recoil here, a little bit of a rally and a little bit of a spook as we saw in 2018 when everybody freaked out on that fake out breakout when you saw the 10-year yield get back above 3%. Let's see.
Okay. Well, Mr. J. Powell eventually turned around and caved to markets. It just took a little bit of carnage first in an inverted yield curve. But that's a longer conversation, Alan. Just for the buy the dip part, what about for the NASDAQ? We've been selling rallies for a couple of weeks. What will become convincing as potential trend establishment to the downside? What are you looking for us to notch another lower low, to break below that September high? What to you would change the game for the NASDAQ?
I think we tested and made new multi-month lows and then rallied back last week.
That's correct.
So if that can hold, 13, lucky 13 is my number. 13,000 in the NDX is a pivotal number. It's the halfway point of that drop from the top. And typically, if you give above that halfway, if it more than a 50% retracement, guess what? We rally all the way back. So we've seen that time and time again. Apple still can't find a bottom. So psychologically, I think that's what's holding the market back. But people can quickly change their sentiment when you see Apple on the move again. Again, let's remember last quarter, they made an $18 billion profit for the quarter. That's more money than most companies make in a decade.
Okay. Alan, let's talk about your trade today. You're going outside the U.S. You're going to China to trade social media stock WEIBO, WBs.
Yep.
The ticker, it's pulled back from the highs after a lot of these Chinese tech companies ripped at the start of the year. My guess is you're buying the dip.
Yep, buying the dip. Now, looking at this, it obviously has less exposure to what's happening with interest rates here in the United States, but technology has tended to stall, obviously, here in the last weeks and months. Now, looking at WB, this stock had rallied up 100% off its May's lows to its December highs. Since that time, it's relaxed, and then we've seen a profit-taking pullback, and it's down 15%. Now, if you look at that chart, 45 is critical. That was a double top that it broke out above and rallied to those extreme highs. So I'm leaning on that 45. I'm looking at the April 45 calls. They're trading for about 9 or 10 right now. They're deep in the money. They're going to have a delta of about 80%. So it's a stock substitution strategy here. And it's a good value here at these levels from a risk-reward standpoint. You get yourself some time, but what I'm seeing is smart money is starting to accumulate big positions on the bullish side in WB, and we've seen this play before, and it's rallied. So I'm willing to jump on board one more time. Okay.
So you're looking at support from old highs, so some traditional kind of technical analysis saying, hey, we've been here before, and then the strike that you're looking at with the 45 calls, this one looks even more deep in the money than usual for you, Alan, as we go $5 away from 52.
Right. It's because it's got a degree of volatility, and because I'm buying less time. I'm buying an April option. If I was buying a May option, I might not go as deep in the money. So there's always that balance there. But what I'm looking for is typically something between a 75 and an 80% delta, so it'll act like the stock. That's the key on the upside. So if we can get a little bit of an upswing here, from our lows 50, it had a nice reversal on Friday. It needs to build on that. And so from 50 to 65, so somewhere around the 57 level, if it can rally above that, then that'll be a very, very positive sign. And if that happens, that option will start to gain in value very, very, very quickly. And that's the key. A modest move in the stock turns into a big return in these deep in the money options. That's just the math.
All right. Appreciate it, Mr. Nuckman. The K is silent. The chief market strategist at St. Paul Research. Good stuff, Alan. Always like to trade in the details. Let's take a little diversion from the highlights of the morning, which are about stimulus and the market's response. Bond stocks, put it all to the side. We're going to get a little weird next. We're going to talk non-fungible tokens, NFTs. For many, it is the highlight of a speculative fervor in markets overall, but our next guest will make the case that it's art like anything else. The NASDAQ almost back positive.